Hey everybody, welcome back to my channel. My name's Max Convexity and I appreciate you guys tuning in. It's a big day in the Defiance and the high yield ETF space today because of course I'm sure everyone already knows Defiance paid their dividend today, or they announced what the dividend is going to be. It's not paid for a few more days. All right, so good news here. I got this from another influencer, and I hope it's all right. I got this sheet that says how much the dividends are. 93 cents in the QQQY. And I just want to give a shout out to Retire on Dividends. He predicted 94 cents, and he was right on the money. Good job, Retire on Dividends. JEPY earned 65 cents, and that, I've been tracking them every day for a couple of weeks, and JEPY earns about a fourth less every day than QQQY due to the fact that JEPY is less volatile. So that falls in line with what I would expect. That leaves JEPY with a 42% annualized yield. Of course, these can all change. That makes QQQY 60, and they've been pretty consistently in the 60s. And the big news is it's a tiny fund at this point. I just started covering it today. Tune into my noon update if you don't already. I give an update 3 times a day on how these option strategies are working for the individual funds and where the profit is and the break even and all that kind of stuff. So, but look at this. So I just started covering this today, and they're only a $7 million fund. It's a small fund. But it's just absolutely taking off. It earned a huge dividend, 71.95%. And I didn't think this up myself. I heard this from another YouTuber, and I can't remember where, but it's an excellent point. QQQY is close to an all-time high. I think it may have been Kamir that said this last night on his channel, but QQQY is close to an all-time high. IWMY is not. So if you're a value investor and the QQQY scares you, you have IWMY. I just think the more the merrier. It gives you some level of diversity. Of course, if there's some problem like 2006 or 2008, they're all going to go down. So doesn't really give you that much protection, but it does give you some month-to-month diversity when one's doing better than the other. When JEPY only earns 41%, you got IWMY earning 71%. Maybe in a few months from now, that might be a different situation. So that brings me to my second topic. I wanted to talk about suitability a little bit. I've told you guys before that I used to work in wealth management in the 90s, and my disclaimer always is that I know a lot can change in 25 years, but there's also a lot that's still the same. I like to give you guys some inside baseball. So suitability refers to an ethical and enforceable standard regarding investments that financial professionals are held to when dealing with clients. My firm, if I sold something to somebody or suggested an investment for somebody that wasn't suitable, maybe it's too risky, maybe they don't understand it, maybe whatever, it could be a number of things. I could have got in trouble and got fired and fined. I mean, it's a real deal. The thing is, in about 2005 to 2010 time period, pretty much everyone went to where you're your own broker. Most people are self-service now. Charles Schwab, Scottrade. I don't know if Scottrade's still around, but E-Trade, Tasty Trade, all those. So nowadays you don't have a broker looking over your shoulder, which is kind of good because you don't have a guy pushing investments on you don't need. That's not what's supposed to happen, but it does sometimes. But the other thing is, though, you don't have someone looking out for you either, and that can be a really good thing. So I get letters on my site. I've got some of the best letters from people, but some of them I could just tell they aren't suitable just by the letter, the content of their comment. They don't understand it, or it's just not something they're comfortable with. And I say great, you do you. I'm from Austin. I'm a libertarian. I believe that everyone should, do their own thing, and that's what makes this country great. So I love all my commenters, even the ones that aren't going to get the fund, that never want to get the fund. That's fine. That is absolutely fine with me. So let me give you some inside baseball on how suitability works and what it really means. And I'm going to change the names and the details to protect the protect the innocent, so to speak. But I had a customer come to me in the late 90s, right when fracking and directional drilling was taking off. And the customer's father had just sold a directional drilling oil firm. And the father gave my customer a check for $1 million. And he told her to go, that's hers to go invest and to go, save it for her retirement or whatever. She was, if I remember, I want to say she was maybe college age, maybe 23 or 24, but young woman. So she came and saw me because she'd been to Merrill Lynch and she'd been to some of the big firms. I worked for a boutique firm, specialized in option selling. Imagine that. But I worked for a boutique firm, and somebody said that I would be good for her. So she came in to see me, and the other guys at the big firms, they were just she felt like they were trying to shove stuff down her throat, and she just didn't understand. She just wasn't comfortable with stocks and equities. She just wasn't comfortable taking much risk at all or any risk at all. I have a feeling if her dad wouldn't have told her to go invest it, she would have just probably put it in the bank. But so, and I pick up on this. So she's not suitable for the stuff that I might recommend to other customers, like a high growth mutual fund or even a value mutual fund. Back in the days, there weren't ETFs. All there was mutual funds, basically. I think the SPY had just came out in the late 90s, but there wasn't the selection of ETFs we have today, unfortunately. But so I got her in. I could just tell she wanted zero risk. So I looked at believe me, I would have loved to sell her the QQY or sell her on some option trading strategies. She could have done great things with that money. But, obviously it wouldn't be suitable. So I put her in a bond fund. And I put her in like a 30-year bond fund. So it's the most, has the least volatility, theoretically. It was a mutual fund. And I'll be darned if for whatever reason, interest rates didn't drop by a crazy amount in the next few months. That's not why I put her in the bond fund. It had nothing to do with it. We weren't trying to time the market. But she came back to me 6 months later, maybe a year, and she was up a large amount of money. And she didn't want to lose any money, for sure, when she brought it to me. But then she came back and she said, well, maybe we should put some of this in some of those mutual funds. And all of a sudden, she was becoming suitable. She saw how it worked. She got a few statements. And, so the suitability is on a sliding scale. She wasn't suitable, and then she became more suitable for investments. Who knows? Today, she's probably investing in the QQQYs. There's no telling. I mean, I hope so. But that was my favorite thing to do when I worked in wealth management, is to work with people and try to help them to understand it in the way I do, or if I can't, find something that is appropriate for them. That's what it's all about. So now that everyone doesn't have a broker, that I'm afraid that suitability gets missed, and you'd have to decide for yourself if you're suitable. So that's where I think this channel comes in. I'm trying to help explain it to the people that don't understand how the option selling strategies work. But also, I'm not, if you aren't comfortable with it, that's fine. I might start making some videos on some lower yielding funds that are less volatile that are also fine. I mean, everything depends on your own situation and your own comfort level. That's what it's all about. And I mean, that's my theory on wealth management anyway. Let me know what you guys think. And it is a little bit of a rainy day here in Austin, but I'll be back at noon with an update on the market. It looked like it was selling off last time I looked to it. Okay, so here's a live chart of the NDX. So yeah, we kind of went out of the profit box, but anyway, maybe we'll rally back up into it by the end of the day, or maybe we'll have a losing day. We haven't had very many this month, so we're probably due. I'll be back with a better update on the market in about an hour. Thank you very much, and you guys have a great day.